When we talk about models, it's the word that you use to sort of say, okay, here's a conservative model with their 10 to 15 different funds, whether it's ETFs or mutual funds. And then here is a moderately conservative model and so forth. And then here's a growth model, which is individual stocks. I mean, models is another word for a portfolio, really, just so all of our clients know. And all of our listeners know. When we say model, you can use model and portfolio, kind of interchangeably. But also, you brought up an interesting word that I want to kind of go back to, which is risk-based. So sometimes people ask us about our philosophy. Now, philosophy we can spend some time on, because I also want to kind of get into versus active versus passive management and tactical management, and just kind of help provide definitions for all of our listeners on what those words are. But expand a little bit on risk-based. When you say risk-based portfolio, what do you mean?
So thank you for asking, Matt, and I want to make sure we clear that up. But it's built into our philosophy. So if anyone has heard the term risk-based, we also associate risk-based with allocation-based. So in allocation terms is the way we manage and build out these portfolios is we take a specific amount of equities and we pair that, with fixed income or bonds. So our moderate portfolio is for a very typical investor, it's 60% equities to 40% bonds. So we determine that as a moderate risk score. So you're balanced. That's we're trying to create a balanced portfolio for our clients. You have a little more equity to a little less bonds. So our portfolios that we manage here at SHP, we use that same investment philosophy, risk and allocation, and then we build the other portfolios up and down what we call a ladder. So if we want to be more aggressive, you would go to our aggressive portfolio, which would be a 90% equity ratio to 10% fixed income / bonds. Mm-hmm. So these are all conversations you'll have with your advisor and how your comfortability level is. Your advisor will then come in and kind of pair in your success with their financial plan. But we have the portfolios that are going to basically cater to risk and allocation so the clients can really feel comfortable of what they're investing in. Obviously, we can dive into product and fund specific, but having that baseline understanding of where you're positioned in the terms of being balanced from equities into fixed income is, I think, along with certain reports we generate, are very hands-on and really can send the message to what the client's really invested in.